currently find some software AI beneficiaries in Asia. Therefore, we think the hardware theme might have a pause while the market digests some of the looks for software winners in that AI area.
Mark is also digesting what we heard from the China Politburo when it comes to supporting the economy. We want more details from the World Economic Conference, but how are you expecting regional markets to react to that? It was interesting that the global reaction really was pretty muted overnight.
Yes, I think the market reaction is reasonable. We do expect
a little bit of softness there when it comes to trading in the Aussie dollar. There as well, we're seeing bonds edging a little bit lower.
2025 from the Chinese government. We understand if they would like to save some bullets for when the new U.S. administration takes place and there's more clarity on the tariff front. But the direction is definitely positive, and we therefore are still constructive on Chinese equities at the moment.
What would you be focusing on within that constructive stance?
So fundamental, macro is still very tough, obviously. But like in Japan or in Korea, we are seeing Chinese companies shifting towards more shareholder-friendly stance, redistributing in terms of higher dividend payouts or buybacks. And this is a change that we haven't seen for a long time in China or this year. We believe the earnings are, fundamental earnings are.
Look at some of the sort of Asian market darlings this year, the likes of India, the likes of Japan. Do you expect these themes to play out in a similar way and an extension of those rallies into next year?
Yes, so India is currently going through a soft patch in terms of economic cycle. But we also think there is some elements of structural headwinds. For example, the household leverage ratio has risen. So net savings for households, it's down, very low. It's probably one of the lowest since 1975. That's obviously affecting consumption. So what we really need to see in India is more quality salaried jobs being created, and that would require more private capex starting to happen in India. So we await some of good news or positive signs of that. Whereas Japan, we feel that the sustaining wage increase, that's also good news. Japan is also, we are subject to tariffs, obviously, but less so than the other exporters. So here we are still positive on the outlook. And of course, the corporate governance improvement and shareholder return story still has legs to go in Japan.
Isa, we're watching some Korean stocks right now, including Kia, actually gaining about 0.3% early in the session. Of course, we were talking about metals workers in the factories across South Korea for this auto manufacturer going on strike for a few hours today, demanding President Yoon's resignation. Do you expect the political impasse to have a lasting impact on Korean markets?
Well, I think what markets really don't like is uncertainty. So the quicker the political issues are resolved would be positive. We also feel that the underlying trend of pressure on the Value Up program, for example, will continue. And of course, Korea has always been a cyclical export-driven market. So any improvement, for example, in China would be a positive for Korea. So I would say, obviously, the political issues are, it's an uncertainty that we would like to see getting resolved down, very low. It's probably one of the lowest since 1975.
Yeah, we had some miscommunication here in the control room, but Isa, we will leave it here. Isa Ogoshi, Asia Equities Portfolio Manager at JP Morgan.
Are subject to tariffs, obviously, but less so than the other exporters.
Public protests pressuring President Yoon Suk-yeol to resign. We speak live with the striking metal workers union leader this hour. This is Bloomberg.